know that you have in recent notes, chart after chart of pretty strong growth, pretty V-shaped recoveries in a lot of places. What now, I guess, is the question that we have to ask.
That's a very complicated question. What's the problem right now, as you know, being up in Toronto or being in New York or being in Paris, is this pandemic is really ripping through the system. And I can't tell how much it's going to put the reopenings that we've had on the back burner. And to the extent that happens, the economy could hit an air pocket. But aside from that, like you mentioned, I'd share with you that right now it's still doing, I find, surprisingly well. We survey retailers every week and just got that today. And this week, they're still very strong. Consumer sentiment, you reported, edged up a little bit. Unemployment claims this week, third timely indicator, they improved a little bit this week. So far, the economy is doing quite well. And the future, by that I mean when you get out into 2021 and you get a vaccine and you get the lagged impact of monetary stimulus and you get fiscal stimulus, even if it doesn't happen until February, 2021 looks quite attractive. But in the meantime, we have an air pocket risk, which is bedeviling the stock market. But that's, in my opinion, offset by extremely stimulative monetary policy.
Ed, you just referenced your retail survey, but you send out a lot of sort of underground surveys, if you like, to all sorts of industries weekly, and it's proprietary information, which is one of the reasons why you're so fantastic a forecaster. Who's sending you back negative comments or negative readings or fears about the future? Where are you seeing those being expressed?
So we survey about 30 different sectors, and almost all of them are now improving. But to different degrees. So, for example, our trucking survey on a 0 to 100 is up to 62. It's up 3 points this week. Our airline survey, in contrast, is 22, not 62. Now, that's up a little bit from 15, so it's improving, but, still very bad. But almost every sector that we survey is doing a bit better. But the economy in general is still in a deep hole, if you want to put it that way, but it's improving.
You referenced the Fed, and I know, many are of the view, as you are, you don't fight the Fed, you don't fight the ECB. But when you talk about the lagged impact of monetary stimulus, when you look into the out years, what are we talking about there? How do you interpret that, and what does that mean about where you think we'll be then?
Well, first off, we've been at this for well over a year now. So you're now in the situation where, say, global short rates, which we track very closely, they were 2.25, and now they're below 70 basis points. They're already starting to have a positive impact. And balance sheets, for example, the Fed's balance sheet is already up 80% this year. So monetary policy works with a 1- and 2-year lag. But you're now to the point where it should be starting to help the economy now, but it helps more in 2021 and in the early 22.
Ed, you're also on the board of the China Institute, have been for a long time. I'm curious as to your thoughts about the relationship going forward with China trade-wise and what's happening right now. Are we to look at Apple's 29% decline in China demand as anything to read more broadly from?
Like the other comments I had with you, it's a mixed picture. Mm-hmm. First, China's economy is doing quite well. We survey companies that do business in China, like the other surveys we do, and that survey has been moving up. It's now over 50. And I think that China's economy is the strongest in the world. We're forecasting 8.5% growth for next year. And it's going to be a lift for the world economy, and it is a lift for the world economy right now. But with that said, I've been very disappointed with the tension that's built up between the U.S. And China, and whether Trump continues or Biden comes in, I don't see a particular path for that to get a lot better. But China's economy by itself is being a real anchor for global growth right now. And China is leading. They went into the virus first, and they came out first. And so I watched them very closely as a leading indicator for what the global economy is doing. The problem is that they're not having a re-emergence of the virus like we are here, or more pronounced in Europe.
Real quick, Ed, you must have a base case scenario for what happens in the election for when clients call. What do you say to them?
I don't think it makes a difference. I know that's a cavalier remark, but I've been at this. You had Henry Kravis on, who's a good friend of mine. I've been at this for 50 years, and I think Biden will move toward a centrist position. If I'm wrong on that, then I'll go back and change. And Trump, we know what his general line of attack is. So there are definitely risks, mainly if you get a big increase in taxes, but you're also going to get a lot of fiscal stimulus. So I don't think it makes a big difference, and I know that the consensus is heavily that Biden wins. So if that is the outcome, that's not a particular surprise.